it is an extremely slow market. If you're looking to sell a condo,
will we ever get a rate cut from the Bank of Canada? The June announcement is coming quickly, but it doesn't sound like we're going to get that rate reduction that a lot of us were hoping for. Now, if you're a homeowner and you've owned a home since 2020, you're in potentially two different camps. You either have a variable rate and your payments have increased substantially over the last 4 years, or you ended up choosing the wise route and you chose a fixed rate, but your rate is coming up for renewal in the next couple of years and your payments are going to be significantly higher. In today's video, we're going to break down what I think is causing the market to be so slow, especially on the condo side in the GTA, and what I think is going to happen when we see some of these rate reductions actually happen. If you're a homeowner, you might want to stay tuned for this video to see the impact of what potentially can happen here. A lot of people might expect that the Toronto real estate market is always going to be moving well, but unfortunately right now, if you are looking to sell a condo in Toronto, there are historic levels of inventory available. And when we say historic, we're talking back to the early 2000s. So a 20-year range at which the condos had been moving pretty well, but we've now seen inventory levels spike to a buyer's market. What does this mean? If you're selling a condo in Toronto right now, are you waiting for these interest rates to adjust to see what the impact is on your potential sale? Are these buyers sitting on the sidelines because they're waiting for the interest rates as well? Let's dive into the video here as I break down what is happening in the real estate market, how these interest rates may affect you. If you're new to the channel, my name is Mike Carpino. I help families move from their first home to their forever home, and first-time home buyers get into the real estate market. If you want to book an appointment with me, feel free to click the first link in the description. That is my Calendly link. We can hop on a 30-minute consultation call together and figure out the best way to get you into the real estate market. I help families through YouTube every single week facilitate their moves in the real estate market. And if you want to be the next person that I help, feel free, reach out to me. My contact information is in the description box down below. Now let's get into the topic here. What we're going to talk about is the interest rates and how they are actually impacting the market that we're currently living in. Right now, it is an extremely slow market. If you're looking to sell a condo in Toronto, it is possible, but it's going to take some creativity and some finesse to get the job done. There is a historical amount of inventory that is actually out there, and the reason why we're seeing this historical amount of inventory is we've now hit the spring market when a lot of people did anticipate that the market would get better. We might see a rate decrease by the time spring came around, is what people were hoping for last fall, and we haven't seen that yet. But people thought the spring market would still see an uptick in interest for potential buyers. Yet we haven't got there. So here we are in the middle of May, now looking forward to our June interest rate announcement. And spoiler alert, it doesn't sound like we are going to get a rate reduction in June, and potentially maybe not in July as well. So we have gone from this grand scheme of things predicting maybe a point reduction all year to maybe a point and a quarter to maybe getting 1 to 2 rate reductions this year, potentially totaling 0.5%, which is a big difference in what a lot of people were predicting. Myself included, I was thinking we were going to go from a 0.75 to a 1 point reduction based on what the Bank of Canada had discussed. Now, I don't think we're any longer in that camp. I think we're more likely to get a 1/4 point reduction to a 0.5 point reduction, and that is it. We're not seeing the other numbers that they want to see on the inflation side of things, and now that's having a dramatic impact on the real estate market here. Now, just to give you a big picture view of everything, let's say you're considering getting into the market right now. You're potentially going to get a $500,000 mortgage at 6.5%. Let's say you're going that variable route with a little bit of a discount. The difference between a 6.5% and a 6.25% is about $100 a month. Now, you might not say that this is a big difference, but if you're trying to buy your first home, another $100 a month could cover something like your internet, some of your utilities, some of your grocery bills. So eventually, this is going to compile. At the end of the year, you're going to have almost $1,200 in additional income if the rates drop just a 1/4 point. And at the end of your 25-year term, you're looking at about $30,000 that you could have potentially saved if the rates drop just a little bit. Is this the reason why some of these home buyers are sitting on their hands and waiting? Do they want to continue to save a little bit more money until we see the rate reduction? It's possible. Now let's look at the other side of the coin. Let's say you're a homeowner. Let's say you bought that home in 2020. Let's say potentially you chose to go the variable route and you got a 1.45 variable rate. At the time you chose the right route, the rate was fantastic. Your mortgage payment on a $500,000 mortgage would have been about $3,350. So just under $3,500. Now today, fast forward, your rate is going to be north of 5%. It's likely in the 6% range, but let's say your rate is only 4.5%. We'll go way below what it is today. Your increase from 2020 payments monthly to your payments today is roughly $800 increased per month. What does this mean in the grand scheme of things? Well, it means that you're paying at a minimum another $9,000 to $10,000 a year just in the increase in your variable rate mortgage. So what's happening here is we've got a combination of two things. We've got homeowners right now who potentially need to sell because their payments have gone up so much. We have the buyers on one end who want to get into the market, but they're finding this interest rate barrier. They both need to meet up. And if you've purchased a home more recently in 2020, 2021, or 2022, you can only sell your home for such a price where you're not losing money. The last thing you want to potentially do is say you bought your home for $1 million, sell it for $800,000, and you only had $200,000 into it. You might be stuck paying your commission and some of the lawyer fees out of pocket, which is a situation that not a lot of people want to be in. So what we are looking for right now is some stability in the market. We're trying to find it. The interest rates are not lowering at the moment, and they may not lower very much. And because of that, we're seeing that these buyers are being very patient. Now, buyers generally aren't the most patient, so it's nice to see, but it's putting this strain on the current real estate market. We're going to have to figure out what a good balance is here. How much lower do the rates have to go in order to keep the prices similar to where they are and not set the market off on a tangent again? The big risk, and the reason why I think the Bank of Canada has yet to lower the interest rates, is because they understand the moment they do lower them just a slight little bit, that any of these buyers who are just sitting, waiting, frothing at the mouth to get into the market will likely jump into the market. Even if it's just a temporary jump, it would boost a lot of these prices up and now start to skew a lot of the values of the homes. If you're a homeowner, this is great. If you're selling your home, this is great. But long term, you lower the rates a little bit, and if it boosts the prices up, your payments are going to be exactly the same as they are if they didn't touch a thing. So the Bank of Canada is just really choosing to allow people to deal with the current market the way it is. So if you're suffering as a homeowner, I think you might be stuck suffering at least another 3 to 5 months at a minimum. And then you might just get a slight bit of relief. It might be just $100 relief a month if you have a $500,000 mortgage and we drop it 0.25%. If we get a little bit more relief, it would be nice. But the reality is the Bank of Canada does need to be very careful. Now, although a rate reduction does seem great, it could provide relief for homeowners. It could provide more opportunity for home buyers, being that the pricing to get in the market for them does become more affordable, and maybe the bank is able to get them a little bit more on the affordability side, but it comes with those risks that we've already discussed. What are your thoughts on this real estate market? Do you think the Bank of Canada should be lowering rates? Do you think they should stay the same? If you're looking at it from an outside lens, if you pretend you're not a homeowner, if you pretend you're not a potential home buyer, what do you think should happen in this real estate market? Obviously, we all have our biases. There's going to be somebody in the comment section who's saying it's going to crash, and there's going to be somebody else in the comment section who's telling you that prices will continue to go up forever because we take in a lot of immigrants every single year, and we can't build enough houses to supply the demand that's coming in. Let me know. I'd love to know what you think in the comment section down below. My name is Carpino. This has been another video. I'll see you in the next one. Bye for now.